Welcome to the Matrix. You're one of the pioneers of this big trend. I'm offering you the time dilation theory, a brand new trading methodology revealing all the secrets in the financial markets. Unlock your true potential with TDT and escape the Matrix.
Hi Neo, welcome back. In this video, we're going to dive deeper and learn the advanced counting techniques. And remember, this is only foundational. We've got 4 techniques right here: counting contractions, resume counting for high probability entries during time expansions, reverse counting for targets and turning points in price axis, and lastly, multi-time frame counting to anticipate time distortion. These techniques will make you more advanced at my time dilation theory. Let's talk about inside candles, Neo. Inside candles kickstart the time contraction and have a big role on time distortions as well. We call it inside candle once the very next candle fails at closing above or below of previous candle. Only one inside candle should not change our classic counting. However, consecutive inside candles is when we should pay attention and change the counting. In this example, we get 11 and 13 using normal counting, as we always do. But when we ignore the candles that are not able to manage closing above or below the body of previous candle, we've got the scenario right-hand side in the image. Sixth candle kick-started the time contraction, whose highs and lows are marked with red lines. The very next 4 candles failed to close below the body of the 6th candle, so we need to shift our counting in the cases like this one. Please also pay attention to how these 4 candles might be seen on the lower time frames. Consolidation? Can you imagine what you're going to see when counting this consolidation on lower time frames? Let's review one more example, Neo. I would like you to check the blue marked counting first and check the green counting just after. This turning point on 13th blue counting is also an important number on higher time frame, so that we've got this reversal over here. We start to observe consecutive inside candle just after the reversal, so we need to count based on the rule. 1, 2, 3, 6, 10, 16, and 17 as the last candle, before time contraction ends, where time starts to get expanded once again. I also need your attention at orange countings, Neo. Can you see that how the counting is changed here? 1 to 2 and 2 to 7 accordingly, which is followed by 13 and 21. And the daily chart, Neo. This is where everything becomes more clear. This is how it's seen on higher time frame, and our example looks great when coupled with higher time frame counting. You're going to learn more about this on the multi-time frame counting section. Resume counting. We've got 3 different countings here: red, black, and green ones. Black counting is the classic one, like we always count. Green counting is the counting where different reference points are utilized with the black counting together. Red counting is the one with the candles, where the ones with X mark aren't counted. Okay, so what is resume counting for Neo? Resume counting is only used during time expansions for better precision and understanding in time dilation theory. 2 different reference points are picked and you start counting just after. This explains why our classic counting doesn't work sometimes. There's a time contraction going on here. Check the candles with X marked. We get 9 and 10 as the lows, yet it's 7th candle as you realize when you check the red counting. I would like you to see green 13th and red 21st candle, Neo. Doesn't it look amazing? Please stop the video and think. You can find many examples like this on charts by using resume counting and counting contractions together. One more example for resume counting. 3 different countings on different reference points are used here. We count this way to enhance our counting during time expansions, where there is no contraction or distortion in time. Remember, consecutive highs and lows or incompatible highs and lows can be used for new reference points. Black counting is the classic counting again. Consecutive high is chosen relative to first candle in black counting for the green ones. Incompatible low is chosen relative to first candle in black counting for the red ones, and orange counting is the daily chart counting for the bias right here. I think the best and the easiest trades can be taken with this way by counting on 1-hour chart. Daily chart for bias and turning points on 1-hour chart. Your entry, of course, may differ from this, but you can still count on 15-minute chart for the entry. whose stop loss is tight. This requires more experience in trading the markets and more experience in my time dilation theory and practice. But everything is possible and profitable with this way. Reverse counting. It's quite similar to ICT's look-back concept on IPDA data ranges. This reverse counting is to determine target prices, kind of liquidity pools. Reverse counting can also be used in a way, just as we do in the resume counting. You can count forward and backwards at the same time to get sync with the current sequence and frequencies in the market environment. I marked the 7, 13, and 21 on the chart as you see, but we counted backwards from the first candle that created the lowest low, and it's marked with 1. This approach mainly provides you to know where you can collapse your positions at profit. 7 candle back high is the easiest and closest target. Meanwhile, 21 candle back is the farthest target, where the flow of the market might change the gears. Let's review another example and approach over here. Let's pick the lowest low here and mark with 1. If we start counting backwards, we're going to realize that the high is created 10 candles ago. This is a great reference point and a great method to know the current frequencies of the asset you're trading. This means that 10 candle later you're going to see new high is going to form, which leads to a retracement or a consolidation. Counting backwards will also make you advanced at time contraction and time distortion when used correctly. You can just count backwards to locate where and when the highs and lows are created, and you can use the same numbers to count forward in time. And the last section, NEO, multi-time frame counting. I also name this as higher time frame distorts lower time frame approach. We observe the weekly chart on the left-hand side and 4-hour chart on the right-hand side. Price starts to consolidate as the time approaches to 7th week here. Higher time frame numberings have always a big effect to lower time frames. They make them retraced or consolidated. This is when you should anticipate a time distortion, NEO. You can stop taking swing or short-term trades during these times in order to wait for high probability trades. However, this time distortion is also a great opportunity for you day trades and scalps. Just as 7th week begins, price delivery to downside began. The highest probabilities here are the time interval in between 7th week and 9th week. This doesn't mean that we can utilize until the 13th week before the reversal, yet I highly recommend the closest numbers to use for beginners who are not advanced at my time dilation theory. You can follow 4-hour chart countings in between 7th and 9th week here for the highest probability setups NEO. Remember, probability of time expansion are greaten as the numbers converge each other. Oops, I've just dropped a gem. Fractally speaking, there's no end in counting time frames. It's an infinitive loop. Yet certain time frames from both higher and lower ones should be counted to anticipate phenomenons like time distortion or time contraction. Higher time frames should be used for lower time frame distortions. Lower time frames should be used to anticipate possible delays on higher time frames. Generally, higher time frames drive the lower ones, however the opposite might occur. For instance, you anticipate the reversal at 7th week, but it comes at 8th week. Or, you anticipate the reversal at the 3rd day, Wednesday, of current week, but it comes at the 4th, Thursday, day of the week. As you see here, consolidation has just started after the 7th week ends. Time distorts as we're getting closer to certain numbers on higher time frame. HTF distorts LTF. This is the nature of the universe and the markets. We're looking closely to consolidation here, NEO. You will see the same things over and over again as you start counting inside of the consolidation, which is formed by distortion due to higher time frame sequence. We're going to continue with more examples for advanced counting techniques in the next videos, NEO. Take care of yourself and have a great day. Don't forget to take your daily red pill.
Welcome to the Matrix. You're one of the pioneers of this big